Another week down, another portfolio update to go with all of you. So I want to just get right into it and open up my portfolio tracker with Gitquin, which, by the way, if you're not already tracking or measuring your portfolio successes, Gitquin has seriously changed the game for me as a portfolio tracker. So if you want to give it a test run, the link is in fact down there in my description. But right off the bat, you can actually see my overall personal trajectory on the week, whereas my account lost some steam by Friday. However, I did pop up over $223,000 earlier on in the week, just before now settling down to $221,799. Now, I'll join you back on screen to share that my portfolio, as of this past week, has actually undergone some serious changes, which I'm excited to actually now show you all through how it's actually impacted my portfolio. The biggest move, for those of you who don't already know, I sold out of my beloved Johnson & Johnson position. It is news that I didn't ever think would actually come about, but rather recently I've been questioning myself as an investor, as a dividend investor, whatever may have you, and I questioned what exactly I'm investing for, which is ultimately financial freedom and maximum total return. Now, that made me question some of my higher yielding dividend stock positions, and ultimately a play like Johnson & Johnson, which was my fourth largest position, just had to go. I gave it the boot and added United Health to my portfolio. Not only that, but United Health is now officially a new stock in focus for me for 2025, meaning I'm going to scale that position to over 100 shares, as it's a dominant insurance provider within the United States that just had another detrimental tech hack, which made the share price drop, as we now see it trading for $560 per share after just rebounding to $577 per share. But I'm really going to be long on this one, so of course zoom out. The year to date, you're going to see some nice appreciation, but most importantly, zoom out one more time to the 5-year view to see over 128% worth of share price appreciation. Now, if we go ahead and scroll down, we're going to get a very clean income statement, whereas we're going to continue to see that there's plenty of revenue year over year flowing into United Health, all while the balance sheet remains very healthy and intact with assets that far outweigh liabilities year in and year out. Just to further my case here, as a dividend growth investor, Simply Safe Dividends rates United Health a 99 in terms of safety, more importantly a 1.5% dividend yield, which is seemingly lower, but we are talking about a 29% payout ratio, a 31-year track record, and most impressively here, a dividend growth stock with a 41% growth rate. So currently my eyes are on United Health, and I'm going to continue to dollar cost average into this position. You're likely going to see those moves this upcoming week. But I'm going to go ahead and talk more about my buys in a brief moment. Let's open Gitquin back up so we can actually see how this move impacted my portfolio. This is the biggest change. I used to be stock heavy with about 49% in individual stocks, but as you can see as of this video, I'm officially now at 43% ETFs with now 39% in individual stocks. That is how I want my portfolio to be moving forward in terms of being a little bit more ETF heavy. It's an insanely strong investment foundation that I'm setting into place, and I've done that with really 2 ETFs, as we're going to see in a moment. But then I have this pretty big chunk of cash that's sitting here at about 16% of my portfolio. That is in fact up from 10% as of a week ago. Now, I want to go ahead and briefly share that this position is not going to remain as is for a long time, as I use this Vanguard settlement fund like a savings account, given the dividend distributions that make it worth it, and more importantly, because I'm taking cash from this to dollar cost average into my stocks in focus. However, I will likely remain 50% in ETFs, as I shared, and all in all, I get solid exposure now across sectors, remaining tech heavy as a younger investor at 30 years old, which is where my growth really stems from. Almost 50% worth of my portfolio invested right into technology stocks, and mainly again from the ETF that I'm going to talk about in a moment. I have this other chunk here, which is the cash reserve, so we're going to actually disregard that for a quick second. The consumer discretionary sector weighting in around 9.2% of my portfolio, along with healthcare that comes in at roughly 6% of my portfolio's weight, and industrials at 5.3%. Before we tap into real estate at 3.2%, consumer staples now coming in at 3%, and financials coming in at 2.9%, along with the energy, utilities, and materials, the slivers of the pie. But going just a step further here, we're actually going to get a total breakdown of the positions. We'll click on that tab to discover that Vanguard's S&P 500 fund, ticker symbol VOO, is now officially the largest holding in my portfolio, which is exactly what I wanted as my foundation, to be totaling out now around $51,000. Of course, now we have the cash position that's coming in here, but it's going to be shrinking over time after all the J&J capital is reallocated. And then we have a second layer of the foundation, which is built with Vanguard's tech ETF that's ticker symbol VGT. Keep in mind, I am 30 years old. I keep saying that for a reason. So this is really my time to load up on growth and find comfort in a little bit more risk with an ETF that covers the stocks that I really don't bite much into. But then we get into Apple coming in at my third third largest holding and my oldest holding, actually, coming in at $26,000, making up roughly 12% of my portfolio. And again, another nugget there of tech with Google, a position there built off of $21,000 just in this past year alone, which is now roughly 9.5% of my portfolio. Now, both Apple and Google pay a very small dividend, nonetheless dividend payers, but I am in them for the share price appreciation, that growth factor over time. Again, because of my age, it is all about total return. Next up here, though, I want to get into the Vanguard Total Stock Market Index position that I have, because it's actually the next position that's very likely to get the boot, totaling out to around $18,000. I will take half the capital from this and put it into VOO and the other half into VGT, so stay tuned for that. But then we're going to get to the stocks that I have really in focus for 2025, with Visa making up $7,000 worth of my portfolio right now, Lockheed Martin at just under $6,000, and my new holding here with United Health, which will certainly be growing, but currently sitting at $5,634, followed by Amazon and Tesla, the non-paying dividend stocks in my portfolio, before I tap right into Coca-Cola and McDonald's. That all works out to 14 holdings, including the cash position that I have, and it's all in line with my less is more approach. Now, if you're new here, I'm actively actually continuing to work down to trim my portfolio to 2 ETFs and 7 to 10 individual stocks. That actually may trouble some of you as dividend investors who are a little bit more safe, but it really doesn't mean that I'm not diversified enough. So I'm actually going to bring you over to Gitcoin's most useful feature if you use it the right way. It's here under their Gitcoin AI analysis tool, which rates your portfolio. So we're going to see that I actually rate a 9 out of 10 in terms of diversification and even a 10 out of 10 on risk, meaning I'm a pretty safe investor here. And even though I have less positions, it doesn't take away from diversification. Now, I attribute that to the ETFs that I have, but then we can actually go ahead and see that I pay very little in fees. Again, thanks probably to the ETFs as opposed to mutual funds. And last but not least here, we have a neat tool that details out macroeconomic factors, which for me, I score only a 5 out of 10, likely because of my tech positions that are more volatile than not during these times. But we can see here that I'm scoring a 5 because of the interest rates and US policy changes likely to come about, which the interest rates are coming down, but on the horizon here is actually the elections coming up. So policies may in fact shift depending on who's going to be our next president. And just before I close out of Gitcoin, I want to go over to give you a sneak peek in terms of the dividend income that I'm going to be receiving. Total reveal next week, so stay tuned for that. But we're going to see here that a solid month is $237 in dividends. That excludes the dividend distributions from my settlement fund from Vanguard. So again, stay tuned for the total October breakdown next week. Jumping back on with all of you, this past week, I really didn't make any huge investment moves, but I refused to go a week without at least doing some dollar cost averaging. So I'll be short, sweet, and to the point to just share with you that I bought another share worth of the S&P 500 with Vanguard's S&P fund, ticker symbol VOO. Now that costed me $534.23. However, investors, I'd love to know what the heck you've been up to this past week. Feel free to let me know in the comments your recent buys, sells, or just any general feedback on my investment approach. If you have questions, leave them all down there in the comments. No hard feelings here. Honesty is always welcome. Tune in right here, actually, if you want to hear some of the biggest questions that I think you need to ask yourself as a dividend investor. But above all else, subscribe to the channel and make sure you're on this journey with me, and I will see you in the next video.